Mutual funds sahi hai. Mutual funds are basically a professionally managed fund which pools money from many different investors, and from that money they buy securities. Hi, my name is Kritika. I am a wealth doctor. I am founder of Financial Fitness for Her. And in this video, we are going to learn about why you should invest through a mutual fund. So let's get started. So the number one reason why you should invest through a mutual fund is that it is done for you. Now, what do I mean by it is done for you? It means that you leverage the expertise of a professional. So there is a specially assigned mutual fund manager who manages the money which has been pooled for that particular scheme. So you do not need to have any knowledge of the finance or stock market or investment or any topic related to finance. There is someone else who has the knowledge, who has the expertise, who can manage the money for you, and thus in return you can create wealth for yourself. So from your side there is no time or effort is required for investing. So that is the number one reason why you should invest through a mutual fund. Number two reason is that it enables affordable diversification. Now, what do I mean by that? Suppose you want to buy stocks, one share of 10 stocks. Okay, you 10 different stocks. Now, each stock is priced currently at let's say rupees 100. Okay, so let me show it here. Okay, so let's say you want to buy one share each of 10 stocks. Okay, and the current price of that is 100 rupees per share. Okay, now supposingly you want to invest on your own. So what you will have to do is you will have to invest 10 into 100, which is equal to 1000 rupees of your own. But those same 10 stocks could be bought in a mutual fund at rupees 100 only. Okay, so in turn you can save 900 rupees. So that is what I mean by affordable diversification. That if you invest through a mutual fund, you need very less money in order to buy the diversified portfolio of stocks. Okay. Second major advantage of affordable diversification is that it reduces your risk of investment. Now, what do I mean by that? Is supposingly you have 30 stocks of different companies in your portfolio. Okay, and all these stocks are from different industries. So now it is less likely that all the stocks will go down at the same time, or all the stocks will go up at the same time, which can go up if the economy is doing great. But there is less likelihood that all the stocks will go down. Okay, so with this diversification, few of your stocks might be going up, few of your stocks might be going out. So both of them, they balances each other, and that is the reason why your portfolio value is not reduced as much. Okay, so that is again a very good reason why you should invest through a mutual fund. Okay, number three reason is that it is transparent. Okay, now you get timely information about your portfolio. So SEBI, which is a regulatory body, the full form of SEBI is Securities and Exchange Board of India. They have imposed strict regulations on mutual fund companies that they have to provide timely information about an investor's portfolio and everything related to that particular scheme or the mutual fund company also. So everything is transparent, you get to see everything. Okay, secondly, whatever information has been given to you, it is in a very clear and convenient format such that you are able to understand, because SEBI understands that not many people understand the language of finance. So they have mandated the mutual fund companies to disseminate the information in such a way that a common man is able to understand. Okay, so it is clear and convenient format for you. Number fourth reason is that it is easy to encash your money. So supposingly you need money for any particular reason in your life. So you can easily pull out the money from that mutual fund scheme, provided it is an open-ended scheme. Okay. Now, what do I mean by open-ended scheme? Keep watching more videos wherein I will explain all the different types of schemes. Okay. So at this moment, you only need to understand that if it is an open-ended scheme, then you can pull out your money without any exit loan. Okay, so that is one major advantage. Secondly, your asset is not stuck. Now, what do I mean by that? Now, supposingly you are buying a real estate. Okay, now you would have seen that if you want to sell that real estate, you might not get an investor very easily. Okay, so it will take some 2 months, 4 months, or maybe an year to sell off that asset. Okay, but in mutual fund, it does not happen. Whenever you want to sell an asset, you can immediately sell it off through stock exchanges or through mutual fund companies itself, and you can get your money back. Okay. Third is that you can liquidate a part of your investment, or if you want to liquidate your full investment. Okay, so there is a provision that you can liquidate only a part of it only, because you need some money. You do not need the entire money which has been invested. Okay, so that is again one major advantage why you should invest through mutual fund. Fifth advantage is that you get many tax benefits. Okay. Now, one major advantage of that is it is a deferred tax. Now, again, let's say you want to invest, you are directly investing into stocks on your own. Okay. Now, whatever profit you get from those stocks in a particular year, you will have to pay the tax in that particular year itself if you are investing on your own. But with mutual funds, you can defer your taxes up until you sell the whole investment. So whatever profit is being made in that particular year, and if you are still invested in that mutual fund scheme, then you do not need to pay tax in that particular year. You can defer it up until you sell the whole investment. So in this way, you can build up your wealth much faster. Okay. Second is that you get tax rebate. So depending upon the scheme of the mutual fund which you have chosen, you can get a tax benefit of up to rupees 1,50,000. Okay, so your taxable income is basically reduced, so you'll have to pay less taxes. Okay, and the last and the important advantage of why you should invest through a mutual fund is that it is investor comfort. Okay, now it means that SEBI has imposed strict balances and checks on each and everything which is being done by the mutual fund companies. So whatever information they are giving out, whatever their fact sheets they are giving out, everything is being checked by SEBI, and then only it is passed on to the investors, and it is in such a format that it is very easily understandable to each and everyone. Secondly, all the processes which they have are very simple. So they have a simple process for purchasing a mutual fund scheme, and also at the time of redeem when you want to redeem your mutual fund units. Okay, so everything is very simple and very easy, and it requires very little documentation. So let's say once you start your SIPs, which is a systematic investment plan, so it requires very less documentation for further investments. Okay, and the third important advantage of investor comfort is that it provides systematic approach to everything. So they have a system defined and a process defined for each and everything. So let's say you want to invest, so they have a systematic approach called systematic investment plan. You can also withdraw it in a systematic way, which is a systematic withdrawal plan. Or you can transfer your money from one scheme to another through STP, which is systematic transfer plan. So everything is so systematic and so easy that you can easily invest through a mutual fund. So that's all from this video. I hope you like the video. If you like it, please subscribe to Financial Fitness for Her. Keep watching this space for more videos. Thank you.